Good morning, everyone, and welcome to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, it seems like a morning of surprises. Basically, we are probably going to see our first downtick in a long while on the Wall Street, but also we have seen some surprising earnings come through, and that too from Zomato of all companies. If you look at the Q1 numbers, Santo, surprisingly solid numbers given the carnage that the stock has taken over the past 2 to 3 months. If you look at the Q1 net loss, it has narrowed quite substantially.
That's a little surprising also. Typically markets tend to anticipate these moves.
Exactly. Looking at the price performance, you would expect a disaster on the offer, and I think that is what a lot of investors would have been fearing for. But clearly, if you look at the numbers, of course, as I mentioned, net loss has narrowed substantially. Revenue growth was stellar. EBITDA loss has also narrowed on a year-on-year basis. So clearly, the growth momentum is continuing for the company. If you look at, the most positive thing that came out was the fact that the renewed focus towards cost, efficiency has resulted in the food business or the food segment of the company becoming break-even on EBITDA level. I think that is a very big, takeaway from the Zomato earnings for the June quarter. Apart from that, if you look at some of the nitty-gritties, the food segment saw a 10% sequential rise in gross order value. Revenue per order also rose, and I think take rates, which are usually the margins, that also improved quite substantially. So clearly, I think a lot of metrics, growth metrics that a lot of investors would track, I think the company is trying to do better on all those fronts.
Well, CJ, right now the focus appears to be more on technical factors rather than the fundamental factors. Clearly these numbers are much better than what anybody was talking about. But if you see, just about a month or two back, you had suddenly a wave of bullish reports coming out on Zomato. But after that, the stock never stood because you had this news about all the lock-in ending and the other investors, the major investors wanting to sell out. So that is a very big overhang at this point in time, more than anything else. Now, you mentioned a couple of things there. One is the take rate, and the second is the increase in gross order value. The gross order value has increased 10% sequentially, but at the same time, the company has also said that its average order value that has remained flattish, and that is the key.
I think it's trended a little higher, but not really meaningful.
Not enough to move the needle.
Exactly,
and also with the take rate, I think here, if you see, most hoteliers and restaurants, given a choice, they really don't want to pay that kind of high commission rates to a Zomato or a Swiggy. That's always been a fight for now quite some time, right? That is somewhere I think players like both Zomato and Swiggy need to be careful about, because if you see Domino's, they have opted to be out of the platform and build their own. You have some more bigger players doing that, then it could be seriously an issue for Zomato. I think that is something that one needs to be careful about.
I think, Santo, I think the reason why the surprise is there for Zomato is also the fact that this is the first quarter without any COVID restrictions, right? There was no tailwind for ordering at home or eating at home. You had people actually, you have seen the earnings of Jubilant, for example. They have showed that in-store footfalls had increased quite substantially, and that in-dining or restaurant dining had actually improved quite substantially in the quarter. But despite that, I think the revenue growth that the company has shown, the fact that gross order values have overall risen, I think it's a good sign that probably customers are happy, playing it both ways. They are happy to probably go out on the weekends and have, food with their families and friends outside in the restaurant. But maybe during the weekdays, they do prefer to sit at home. Maybe during match days and all, they do prefer to sit at home and eat food at their dinner table. Apart from that, I think the most important takeaway from that here is that, of course, the selling pressure that might come from investors, coming out after the lock-in period is going to dominate the near-term, outlook for the stock. But from a longer-term perspective, what Zomato is trying to do is convince investors that now they are focused more on profitability. This is just not going to be a growth at any cost sort of a mentality that a lot of startups had prior to the crash that we have seen over the past 6 months, clearly. And I think what this earnings season also does for Zomato, Santo, we know that, our colleague Nisha had told us that they are going to probably be addressing roadshows in August to convince a lot of, institutional investors about their business prospects. And with this sort of numbers, they can actually take it to, investors all across the world and probably make a better pitch on why to invest in Zomato. So for me, I think the business model remains very solid. It is a high growth sector. If you look at Credit Suisse, they said that they expect food delivery business to overall triple in the next 3 years in India, or food e-commerce basically. And risk reward, I think, is quite attractive. And it will become more attractive if this sort of performance continues.
Well, I don't know about the long-term prospects at this point in time. There are many factors there, but in the short term, given that the company has managed to put up a commendable performance, probably a lot of traders might be looking at it as a strategic.
I mean, I would not be surprised if some HNI also might, start rethinking that probably maybe it's time to maybe, get some asymmetric gains, because, we have always seen this in the tech sector specifically. I mean, you would remember with the dot-com bubble as well, when a lot of the big names also fell quite, substantially. The gains always are much larger in those sort of areas when business fundamentals are strong, but the price destruction is just way too much. So clearly, a lot to ponder for investors, whether retail or institutional. That said, Santo, let's quickly take a status check on how the market is going to shape up today before we move on to other stocks on our counter. Clearly, it's going to be a surprisingly low start to the market. SGX Nifty is indicating almost a 50 to 100 points downtick on Nifty this morning. Wall Street also ended lower overnight. But surprising packed thing was that oil prices crashed 9% overnight. Now, make of it what you will. I mean, generally you would expect that our markets will be jumping in joy, but clearly that is not the case. So it looks like a very weak setup this morning, Santo.
Well, CJ, given that the market has been rising for so many sessions in a row, some bit of profit taking is but inevitable.
Yeah.
So I don't think one should read much into it. But if you look at the overall mood, the overall sentiment, the overall narrative, that's quite different from what it was about a month back. Look at any factors. For instance, bond yields are cooling, not just in US, but also back in India.
I mean, FIIs are back buying 2,500 crores yesterday.
Yes, they are buying in a very big way. Look at GST tax collection, second highest, all-time high. Look at the PMI data, manufacturing services, that is at an 8-month high. So everything right now seems to be going well. At least the mood is better. But on the other hand, look at the volumes in the market. That is not really picking up. That shows that there is a slight bit of skepticism still whether the market has in fact bottomed out. If you look at average daily turnover, it showed a 5% increase in July to about 46,000 crores, but still year on year it's still sharply down. And at the same time, the trailing 12 month, if you look at it, it's down based on that also. So there is no participation. Also, if you look at the retail participation as a share of the overall market, that too hasn't really picked up over the last couple of months. So there is caution, there is some bit of skepticism in the market at this point, which CJ, I think that it's always a good thing for the market, because still people are skeptical, market keeps rising. It's only when the last bear has given up hope that you actually see prices coming up.
I think, Santo, the way I think, if you look at the macro setup now, I think probably investors are now going to be more discerning, right? Initially, you had that, wave of selling, thinking that, of course, US is going to get into recession, Europe is going to get into recession, global economic slowdown. But now I think investors, especially foreign investors, will be more discerning about which areas are growth pockets, which areas are not, and thereby, rotate funds out of areas such as Europe and US and maybe into emerging markets like India, which actually are standing tall at this point of time.
Well, it's going to be a stock pickers market for the next few months.
And
definitely.
which is your next stock to pick?
Well, the stock that's caught my attention is ITC, a good strong set of first quarter earnings there, net profit up by about 38%. Company has managed to hold on to its margins. Growth across all segments, and the EBITDA was helped by strong performance in the agri and paper segments as well. Now, even at this point, the stock is not very overowned. It's not as if institutions were kind of jumping have all got into the stock. But the bigger trigger here, CJ, now the earnings part has been, I would think, a bit already reflecting in the price. The bigger trigger for ITC here on would be the plan to demerge its hotel business. That is what the market will be really looking for. And unless that happens, I don't think you're going to see any major upside. The stock has been an outperformer this year. It probably could do well compared to the rest of the market, but for the big kicker, you still need something on the restructuring front.
I think, Santo, you're perfectly right on the fact that I think the price momentum will slow down, because I think a lot of the earnings momentum, earnings upside actually is being reflected in the price. We have seen the stock being one of the best performers in the Nifty. The other thing for me is the fact that, of course, cigarette volume growth on a year-on-year basis was quite substantial, almost 25-26%, largely because of the weak base of the year-ago quarter. But now, coming quarters, I think that base effect is going to have a negative impact, because from July onwards last year, we had the economy fully reopening. So clearly, that volume growth picture might start getting might subside going forward. Apart from that, I think the merger, Santo, I think it's still a very iffy topic. If you look at some of the commentary coming out, yes, the management had indicated that they are probably working towards it. But I don't think ITC is going to be very gung-ho about the merger process. They have not been in the past. They have always maintained that they like the, the conglomerate structure that they have. But clearly, it is something that, as you mentioned, would be a very key catalyst for the stock going ahead. One, qualitative point, I mean, this is just probably intuition, but, ITC's rise throughout the 6 months has been at a period when the market itself was not doing well, right? And I think somehow ITC became that hedge in the market. Like when market volatility was high, people were, shifting money towards ITC. But now that the market is turning around, I just feel that maybe ITC will take a backseat going ahead in the next 6 months. So that is just an intuitive call. Let's see whether that works out or
Possibly.
not. Well, a last stock on my counter is from the apparel industry, Arvind Fashions. Clearly a very, very strong quarter, a quarter of improvement for the company. If you look at year-on-year numbers, sales, EBITDA and net profit all did quite well. Even margins also saw a bit of an improvement in the June quarter. Now, of course, this is a stock or a company which benefits from the reopening of the economy, the reopening of offices and schools, and one would expect that that demand trend will likely continue going ahead. Of course, the only caveat being how much inflation will impinge on consumer demand. That is something we have to wait and see. Hopefully, if the RBI is right and inflation does come down going ahead, that could provide a breather and help demand continue into the festive period. So that would be my one bet. And I think overall, if you look at from a valuation point of view, given the earnings upside, valuation appear a little inexpensive at this point of time.
Well, CJ, as far as the performance of the stock goes, it seems to indicate that market is betting on a strong Q1. In Q4, you actually saw a sequential decline. So this Q1 numbers will be pretty critical to see how the stock fares from here. Already it has rallied about 30% over the last month and a half, showing that maybe the market is on to something here. But within the textile space also, the trend is likely to get very selective. You had a big move, across the board move about some months back. That has now kind of narrowed down. Probably here also, based on how the company fares in its first quarter numbers, it would set the tone for the performance. Well, next stock, Bank of Baroda, stable set of Q1 earnings there. Although there was a miss, its pre-provision operating profits fell short of market expectations. Decent improvement in asset quality there, from gross NPS, which were 8.9% during the same quarter last year, has now come down to 6.3%. Net NPAs have also eased quite a bit, from about 3% same quarter last year to about 1.6%. Sequentially also there's been an improvement in asset quality. Besides that, the CASA ratio has been quite stable at about 44%, which is comes in quite handy during a period of rising interest rates. Clearly, when even the interest rates on deposits also move up, causing the NIM to kind of crunch.
Improve,
Yes, so 5% growth in its retail book quarter on quarter. And most importantly, the stock has been among the better performers in the PSU banking space, close to about 18%, and many brokerages in fact are talking about the stock being re-rated. Nomura, Motilal Oswal are among the brokerages which are bullish on the stock, and they have price targets in the range of 140 to 150.
Well, Santo, for me, I think Bank of Baroda, of course, has been a very good performer within the PSU space, along with SBI, of course. The only caveat with BOB is the fact that its, bad asset book or whatever is chunk is always much bigger than, say, for example, with SBI. And I think because of that, it will probably never be valued probably at par with SBI. It will always be valued at a discount to SBI. I mean, even if you look at some of the brokerages, who have dished out their price target, they are valuing it at around 0.7 times price to book value on a 1 year future basis. So clearly, even now, despite the improvement, clearly, the market is not convinced that the bank should be valued at more than one times book.
Well, the markets has opened on a weak note as widely expected.
Yeah.
Nifty is down about 40 points in early trade. The Sensex has slipped below the 58,000 mark. Nifty down 50 points at this stage. Market breadth though is good. 1,000 stocks up and close to about 800 stocks
Yeah,
down.
I think, Santo, I think the reason why the breadth is good is because we're not seeing too much price damage in the mid and small cap space. If you look at the Nifty mid cap 100, it's down about 0.2% at this point of time. The Nifty small cap 100 index is also around 0.2%. So clearly not that much price damage. But clearly, if you look at the auto names are not doing that great. Hero MotoCorp down about 0.9, M&M down about 0.4. Of course, some bit of profit booking was expected in M&M after a stellar show yesterday. But yeah, overall a weak start for the market.
Yeah, and with that we go on to the last stock on our watch list today, Max Financial.
Life, yeah.
Yes. So, decent set of Q1 earnings there. CLSA is among the brokerages positive on the stock. It expects annualized premium equivalent of Max Financial Services to grow by about 15% at a compounded rate between now and FY24. And it's also said that the value of new business during the quarter was good, mainly because of a favorable product mix. And according to the brokerage, valuations are quite undemanding given that the stock has been underperforming for a long time, and CLSA has a buy on the stock with a price target of 1,050.
Well, Santo, insurance space never really excites me anyway, you know that. Of course, they will probably tend to get that 10 to 15%, annualized growth, but overall, insurance is a play on penetration of increasing, coverage for a lot of these life insurance companies. But for me, I think probably within the life insurance space also, I would probably not look beyond SBI Life at this point of time. I think that is one company that is really doing, churning out good growth numbers on a quarter-on-quarter basis. So probably others may not, I would not fancy them too much. At this point of time, SBI Life would be the place I would want to be. But apart from that, life insurance just doesn't excite me that much.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.